Hey everybody. Hey traders, good morning. Welcome to Charts and Coffee. Great to see everybody. Happy Friday. Got the Kraken going on here. Hope everyone's ready to caffeinate and dominate. Good to see you all. All right, so the end of what's been a really interesting week. We're on the, let's see here, let's get our charts up and running. There we go. We're on the tail end of this Monday's volatility. I still think that was a pretty significant Evergrande concern, sort of the memory of Archegos still playing out. And, if there's anything that's been, I think, quite telling about Tuesday, Wednesday, Thursday, and even coming into Friday level. I mean, not just from the standpoint of having closed sort of, I won't call it a gap per se. I mean, obviously we can talk about gap action throughout the week, but this is just a return to the sell-off level. This is, what I'll consider basically a tie ball game. And you'll also notice that we have a point of control. That's the price level based upon the look back that study is basically calculating. That's the point on the chart that has the most volume sitting at it. And here we are having come back to sort of the scene of the crime and sitting at a point of control. The two VWAPs are swooping down on price, and this is the ES. And we've got the NASDAQ, which has been, generally speaking, the stronger of the indices, S&P, Dow, NASDAQ, and it's sitting in a very similar spot. So going into the weekend, wrapping up the week, a little bit of weakness, clearly pre-market, but it's kind of a tie ball game mentality where the market gets to say, what, we kind of erased Monday. What do we want to really do from here on out? So let's go ahead and jump into the questions. As always, great to see everyone. Okay, first question is from Les. Good morning, Les. Love this time of the morning. Thank you very much, as do I. Thoughts on FCEL? Sure. All right. FCEL. All right. So sub $20 stock, sub $10 stocks have different psychology. In other words, when you're above or below 20, I think that adherence to certain technical levels tends to be higher. Below it, it's really a volume game as far as I'm concerned. So VWAP, volume profile, points of control, we really want to pay very, very, very careful attention to historical volume and then the volume that's happening. So for example, the current bar had 138% of average volume. So that current bar, those are the kinds of volume moves that I'll pay attention to. But otherwise, you're really looking overall at what you're anticipating to be a market that's going more into a neutral environment. So says the JT Multi. And you're looking for more green grab candles, which we haven't seen many of since, you go back here into June. So the green grab candles, the higher volume, getting above the wave, getting above the 55, but still below the 200. That 850 is going to present a challenge, but that's what I see on FCEL. Anything sub 20, especially sub $10 price levels, to me are almost exclusively a volume conversation. So thanks for the question, Les. All right. Next up is, good morning, Donald. UNG, right. Natty Gas. Gosh, could Natty Gas have been any more generous to us through August and September? It seems to have broken out of that inside day. Yep. Look, I know a lot of you may not be familiar with these patterns. These are patterns that we talk about a lot in the mastery and really any room that I'm in. And I would say, Donald, what I was looking for was something possibly back in the wave, like we had done last time. We had set this up based on natural gas futures, and you can look at UNG uh, with a pattern that looked a little bit more like some consolidation in the wave. And I'll tell you what, I mentioned to the Mastery folks, yes, the 21 prop is valid, but it's aggro. And then we had not just the inside day, Donald, we had the minor low and we had the inside day. And both of those are being confirmed today as we shoot higher. So aggro at best, not nearly the awesome setup that we saw back in mid-August, but definitely it's on a market that I want to short. That's for sure. So as far as, do I think you could reach the Darvis? And if so, would I fade it? So fade is a no-go. So when we talk about fade, meaning once we get up to some sort of resistance level, like the Darvis, am I going to short it? And that is a big cup of nope, my friend. Great question, though. So do I think the Darvis could be a good target? I'll probably tell you. No, I'm going to tell you, not probably. I'm going to tell you right now that you have a volume ledge right here. Let's pay attention to that. And then another one right here. Let's pay attention to that. And both of those are going to be preceding this Darvis. So while the Darvis is definitely something to pay attention to, I think we have two volume levels, two volume ledges, right? Nice little ledge there, smaller ledge here to keep an eye on. So thanks for the question. And definitely a no to the fade. I will not fade a double green market, not even allowed. It's not even a strategy that I'm allowed to humor. It's just a big no when the structure is bullish, to guess at where the top may be. All right, so next question. Hey there, Kay. It's my very first YouTube chat message. Well, very cool. Very cool. Your teaching has been so valuable. I appreciate that. No, thank you so much, Kay. I do appreciate that. It's super kind of you. And awesome, your very first YouTube chat message. Oh, it's awesome. Awesome. Hey there, Ian. All right, what's going on with the SPOOs, as they say, right? What's going on with ES? I'll just reiterate what I was mentioning earlier. We've got the point of control. We have VWAP resistance. We've basically come back to sort of the scene of the crime in terms of Monday's sell-off. And this is where, again, the mindset of a tie ball game is, look, it could be 9-9, it could be 1-1, it could be 0-0. All it means is everything's equal, sort of an equal footing again. And so now sort of the games begin. So the way that we end on Friday, we have a saying in the room, don't fade Fridays. And that's just an old trading truism. Whatever the sentiment is going into the close on Friday, don't be surprised to see that sentiment on Sunday evening, to see that sentiment play out on Monday. And we could say that happened this past Friday to Monday, usually not in such an exaggerated fashion, though. However, I'll be watching really closely as to how market participants are going to start to position themselves here, because this could, quite frankly, be the beginning of chop. We might start to see this back and forth chop form. If it's more of a, I'm going to start the chop conversation right here. There's a chance it could be a W type chop. There's a chance it could be an M type chop. We'll keep an eye on the support and the resistance and find out which way, it might be suggested, most likely to move. I will continue, though, to respect the trend that was, and I'll continue to look for continuation. I'm not hanging my hat on new highs. None of our positions ever require new highs. In fact, they shouldn't. They should, in much the way we were talking about natural gas. Where have we stopped before? Where are different volume or price or technical levels that might be on the way to that we might want to be proactively exiting, right? Exits being how we pay ourselves, how we control risk. Same thing here. If we get a long trigger, I'm not looking for this to break 45, 50 for me to take my first target. So remember, when I'm talking bullish, that does not automatically insinuate I'm expecting new highs. I'm definitely not, but that's what I'm looking at there. All right, so how do I assess where I should begin on the simpler trading platform? So we're like an ecosystem. Okay, we have multiple rooms, we have multiple traders, multiple asset classes, multiple styles, and so part of it is going to be sort of a discovery of what type of style do I want to really specialize in, meaning you, and then who do I want my mentor to be as I specialize in it. So I kind of look at it this way. If you don't know where to start, there's a reason we offer trials here at Simpler. Take advantage of the trials. Try some different rooms to find out which one might suit your needs. And then once you sort of honed in on the style that you want to focus on, then look at the mentor and go, all right, I really like the day trading style of this person, or I really like the swing trading style of this person, or I really like the management style. That's where it's kind of like walking into a showroom of lots of gorgeous new cars, all shiny and ready to hit the road. And you just got to find the one that suits your needs, right? You can only test drive one car at a time. I do not suggest multiple trials or multiple experimentation of styles at once, because you're just going to make a big mess, right? What happens is it starts to, one style starts to creep into another, and you end up with this, sort of recipe of different styles and trading strategies and indicators. So that's what I would say. Take advantage of the trials. If you already know what type of style you do want to focus on, well, then just dive into that, and prepare to learn a lot that first month. Don't put too much pressure on yourself to do a lot of trading that first month. Put the mouse down and maybe focus on pen and paper, and just really the first couple weeks, anyways, really absorb what you're going to get. It's going to be an immersion. It's like dropping, it's like us all flying to Spain and, learning how to speak the language just by true immersion. And I think that's the only way to learn. I think that's what gets the synapses to fire. And, that's, that's what we would do it. All right. So next up is, I would like to take your mastery class, but I don't know. Yes, it does. It does. Includes videos and live trading and all sorts of good things. So yeah, Kay, we definitely have you covered on that. Does retracing, hey there, Ian, does retracing more than 50% of yesterday's range carry any weight to further selling pressure? I wouldn't say that alone is going to make me think a certain way about being bullish or bearish. Does retracing more than 50% range? Well, in retracing in what direction? Retracing and we're north of the 50, retracing and we're south of the 50. Clearly we're above the 50% right now of the previous session. I don't really use the 50 on the daily that much, although it's helpful. I like to know sometimes where we are in terms of the 50 on the weekly. That's something that I want to know, the upper half or lower half of the range on a weekly chart. The thing that's most important to me, Ian, is we're south of the close. We're south of yesterday's close, and that's what I'm going to likely pay the most attention to. All right. Watching SLI, BLNK, QQQ plus SPY. I think QQQ is probably going to be dictating much of the risk appetite that we'll see going forward. Remember, QQQ and SPY have XLK, have tech overlapping, have that in common. So I think, where QQQ goes, unless financials and healthcare and or Dow are very, very weak or strong, where QQQ goes, SPY is likely to follow. I don't have anything for you necessarily on Blink. Maybe a 1, 2, 3 would be great. The yellow tells us we're in chop. Fading the lower end of the range probably makes the most sense, Adrian. All right, moving on to Alex asks, how do I handle a Garden Lady low day trade if the JT multi is double red? So a lot to unpack there. Garden Lady low is just my homage to a story that John has told many, many times, and it never ceases to be awesome, about a woman that he met who was a day trader, and some of the interesting and if not unusual things that she did in order to, she was moving, I think John says, 100 contracts That's a huge, huge number of contracts. You've got to be really confident in your strategy and your risk management to do that. But anyway, so Garden Lady Low is referring to a story that John often tells. The JT multi, if it's double red and we're going into the V-score low and HPMR low, I would say this: position size cautiously. Just assume that we're going to see the HPMR broken or seriously tested. So be a little bit more conservative about the zone you get in. Perhaps do it with smaller size, or in lieu of, say, minis, you do some micros. In lieu of both, you might do options. But just presume the market's going to move against you a little bit more than had it been a yellow underlying market trend. So it's tradable, but just it's really calibrating to the bearishness. It's calibrating to the higher degree of volatility, bearish volatility that we're seeing. But it's definitely tradable. I don't believe it necessarily sort of automatically or blanket invalidates the setup, but it changes the setup, if that makes sense. All right. Does MA have a 1, 2, 3? I love that y'all are looking for these things. That makes me so happy. So for those of you that don't know what a Dow 1, 2, 3 is, you know what you could do? Head on over to the all-knowing, all-seeing Google and look up Dow 1, 2, 3. And I think if you do countdown trader, if you just look Dow 1, 2, 3 countdown trader, it'll take you to the 2 updates over at the countdowntrader.com that Trish has done for you all. And it'll show you the reversal 1, 2, 3 and the continuation 1, 2, 3. So if you're not familiar with the Dow 1, 2, 3, very old pattern. It's a reversal pattern. So a specific AJ, what I would say is I really, really would have liked to have seen that our JT multi lower row transition to yellow, because we're not seeing that. Because the 1, 2, 3 ideally accompanies that transition from the double red. So this is a reversal 1, 2, 3 to that. Now the only thing that's also, oh, you know what? Hang on, I just took a little bit better look. So this was initially the lowest low, but then we made a lower low here. So this is the 1. So no, we had to reset the count, and we need another move like this, and before we actually take advantage of the break out, which is also going to include the 200. You know, it could be very interesting what happens from here on out in MasterCard. AJ, I'd keep an eye on it, but the 1, 2, 3, this is the 1. So we're still waiting on the pattern to complete. And then ideally the yellow lower JT multi. But yeah, there's definitely a possibility here. I would say this, though, getting north of the 200 exponential and getting north of the wave and printing green grab candles, this might just be a straight up wave reversal, right? Meaning downtrend, 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 kind of chop around and break through the top line of the wave, start getting green grab candles. That just might be the way in which this particular, in this case, MasterCard, reverses from downtrend to chop to eventually uptrend. So yeah, the previous swing invalidate, but we just start the count again. It doesn't invalidate the pattern. It just invalidates the fact that this could have been a pattern. Yeah, that lower low does break it, but it doesn't invalidate breaking the 200, breaking the wave. Okay. So thank you for the question. Yeah, I love that y'all are looking for those 1, 2, 3s. Makes me so happy. Okay. Next question is, bear with me here, gang. What do I think about ZB? I'm still bullish bonds. I'm not as bullish bonds as when we were in a double green, but I'm looking at this low here. I'm not sure that I want to buy it today because this would be a minor low potentially. That means that Monday's candle could be the setup. So this is potentially an inside day today. Yellow market sitting at the mean of the V score right in there, sitting at the VWAP, which is anchored to the first of the year. there's some interesting support, but we may want to confirm the inside day setup. So I'm sorry, minor low setup. So great question, Andres. Good stuff. All right, so that is it for me. I'm going to jump on over into the futures room. For those of you that are not aware, we have a new schedule starting next week in the futures room. And so if you haven't got the email or you haven't seen the schedule, go check it out. And I'm going to be hopping in there for today for the first hour. So I'll see you all there shortly. In the meanwhile, enjoy the rest of your day. It is a Friday. Be careful. The end of a week is very different than the beginning of a week, just like the end of a month is very different than the beginning of the month. The end of the day is very different than the beginning of the day. So the end of something is always a little different. But some of the setups we're going to see today, I think, are going to lead to Monday trade alerts. So if you're in the mastery, you're probably going to get some trade setups from me today that we'll be looking for on Monday. All right, gang. Thanks as always for your time. Caffeinate and dominate. I'll see you on Monday. Be good to each other, gang.